Okay, great. All right. Well, it's one of those
Well, what
things
are you
where
looking at,
it's
Ben? What are
not
you
as
loving?
sexy as Victoria's Secret. Okay, yeah, I can talk for a second.
Not
I
even.
have
No, it's
been
not like.
think I just was trying to make a funny line, but the no, I think that what is interesting is that you saw this Broadcom today. Kevin, you can bring that chart up real quick. The they
I was
had
going to
they had
talk
a
about it
good
if we had
revenue
time. Yeah,
growth,
I'm
but they beat earnings. But what happened was they were a little short on AI chips, and then they actually on the call said, "Hey, we're not seeing AI productivity." And I think that is where the big source of angst is, and I think that's where the market's really going to go to because it comes out that the COO of Uber comes out and says, we blew through all our token budget. Bain comes out with a
Yep.
study that says, hey, guys aren't getting an ROI like they thought. And I think this is where the focus of the whole market's going to come is that the enterprise might have a pause and say, hey, wait a minute. How do we even measure returns? Like what are the returns on this? And then, how much are we actually spending and what are we getting? And, this has been jammed down everybody's throats. And yeah, there's some good stuff here, but I think that a lot of people are going to be surprised that enterprises could do a pause or deceleration is what I should say. And that's what you saw here. And I think the market's like, ooh, and then these things are not priced like that at all. And as everybody knows, I mean, this has been a one-way train to heaven for all that whole trade. And I think that there's very crowded trade. And we all know how crowded trades can go. They can unwind fast. And so, it's not a big deal this Broadcom because it just gave back everything it had in the run up over the last week. But I think it's something to watch, and I think that's where I would be cautious here is that the AI trade is one that I think is just given. People are just, oh, it's a given, but there's a lot of things under the hood that make me think that like the enterprise might be surprising, and there's a lot of capital that has gone into this. And when you start looking at the capex numbers needed, we saw a Google equity raise for 80 billion this week, boys. I don't think that anybody in their mind
From
5 years
Berkshire.
ago would have ever thought they'd see another equity raise out of Google ever again. This is only the third one they've ever done, and that I think that gave some pause to the market. I think people were like, "Oh," and it's funny because on my Sunday show of Benny and the Squirrel, I said that to the squirrel. I said, "You know what? You might be surprised. We might be getting close to seeing some Meg 7 equity offerings." And he looked at me like I was crazy. And there we go on Monday. And I think now people are like, oh wow, why are they doing this? They didn't disclose exactly why they're doing it. There's speculation. Well, if SpaceX fails, they could buy SpaceX. Or maybe they're just getting in front of the SpaceX and they're getting in front of the OpenAI. I don't know. They didn't consult me, but I'm just telling you that there's a signaling aspect to them doing such a large amount of deal. And there's a lot of debt funding going on in this, but I think that people can also take it as, oh, maybe the credit market, especially the private credit market, isn't quite there as much as people like to think it is. Because if you look at credit spreads, they're kind of tight in the broad market, but under the surface, we see things like Cliffwater and some of these private credit funds 10% redemptions, 17% redemptions, constant redemptions. And basically, that could be them getting in front of this because they see, when we talk about markets, well, I like to think of them in terms of states, right? Right now, we're in a risk on capital markets wide open state. Well, there's a lot of stuff that if we go to the other state, which is capital markets off, that will trade very differently because this train needs capital, constant capital. And so, these capex numbers of 1.1, 1.2 trillion for next year, it's going to be a stretch to get there because that's going to be all the free cash flow of the hyperscalers and then another 450 billion of capital. And where's that coming from? You know what I mean? And then if people are starting to worry about the ROI, right, then you have a situation where the ROI question will start to, like a virus, it'll get in people's minds. And we don't, unless you're at my old shop at Fidelity. I was talking to an old colleague of mine yesterday. I was like, this would be a great time to be working at Fidelity because every day you're getting Fortune 500 companies coming in, and I would go to every meeting, and be like, "What's your ROI? How much you spending?" Like that's such an interesting thing across industries right now. And basically, I think that we're in a situation where if this pauses at the enterprise level or decelerates, that you will see some reversal on this. And the last thing I'll say is we got the SpaceX next week. We did some work on that and put a note out about it. I think that this will be a very interesting IPO. I mean, this is 105 times revenue, boys. I mean, Jeff, how the hell do we start a company and sell for 105 times revenue?
My God, I know. I mean, it's crazy, and what people miss just on the AI point and kind of the way history kind of has a little echo to it. The internet turned out to be a really big thing too. That doesn't mean that everything didn't get overbought. AI is going to clearly change the way we do a lot of different stuff. That doesn't mean that everybody is right to be dumping all their cash into it and that you need to be long every single stock. There's a digestion point and a point at which it just kind of to the idea on ROI. You don't just fire everybody and let your bot do it and feed it endless tokens. That's not a business model for a lot of these guys that are using or the end users of the product. And so it's the shakeout will be kind of a discrimination of the players that actually have a functional use for it. You could see money coming back into the software as a service. You see a lot of it, like just the way you do your business is AI is not